Hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 pips rocking and rolling here, 1st of October 2017. No trade calls, no recommendations. We're responsible for their own stuff. We're here for educational purposes only. So, welcome to the new quarter, new month, new week starting up. So, let's see what's going on. It'll be interesting to see how the week opens with all the events we've had over the weekend, unfortunate events we've had across the weekend, but also we had China news, NK news, etc. So the open will definitely be interesting. This week, I'm not going to read out the whole data calendar, but we've got an awful lot of data pretty much every day with RBA. We got a rate decision out of the RBA on Tuesday, and we've got a fairly steady stream of data throughout the whole week, culminating with non-farm payrolls on Friday. Now, also keep in mind that we have a lot of central banks speak throughout the whole week. Most important ones are going to be Draghi and Yellen on Wednesday, but again, a lot of stuff on the calendar, a lot of potential tape bombs with all this central bank speak, and again, obviously, potential for more headline risk out of, whether it be Washington, D.C., Puerto Rico, whether it's going to be North Korea, whether it's going to be Spain, Catalonia, et cetera, et cetera. So, again, also with China being off this week. Now, we had some China news over the weekend. So, if we look at the VIX, what's happening with the VIX? Well, nothing much. Our call is still the same, that we're going to see a pop back into the high teens before we see it close below 9. If you flip back on the monthly chart as we've just finished the month, you can see that the favorite sport in town continues to be to just play whack-a-mole with a VIX, right? He just keeps on getting smacked down. And again, it'll continue until the day it won't, and things will change, right? There's not much to say or much to do there, but except for being responsible by highlighting that there's an awful lot of complacency out there. If you look at the SPX, so again, you can look at all the monthlies fairly, everything's closed pretty much at extremes into that end of the week, end of the quarter, right? So here, SPX, we're continuing towards, we've got a target on the continued ramp higher of 2531. And that's continuing, so we'll have to see how that trades. You'd still, it's going to be interesting. Usually the first day of the quarter tends to be a down day, so we'll have to see how we trade here. But keep in mind that most likely any dip, unless there's a big change, so there's something out of the Fed, there's something out of North Korea, et cetera, unless there's a big tape bomb hitting the wires, most likely the path of least resistance is for any dip back into the 2500 to get bought and continue this steady climb higher, right? So that's the way it is, right? Unfortunately, unless there is an aggressive reason to sell, every dip's going to continue to get bought. So what we'll be focusing on is 2530s to the upside and 2500 to the downside. If that gets taken out, especially from a day close perspective, then it could get interesting, right? But an awful lot of support coming up on any move down that is orderly. So you'd still expect the bids to come in on any move down that's orderly. The last man standing, apart from that crazy ramp up on the rut, you really you see these kind of moves. Part of you is going to think normally, I got to sell this, but you have to be very, very disciplined, right? Because once you see these rips higher, especially the way this market is trading, there's no edge in trying to catch this. Sooner or later there'll be an opportunity to short this, but you don't want to be stubborn into these. They can be very, very aggressive. As we're saying, the last man standing is the NASDAQ. We feel this is the nicest and most interesting short of the equity indexes, and we'll have to see how we trade across these highs, and especially, unless we get sustained closes below the 5900, it's going to be very tricky to see this sell-off. But we still feel that no matter what happens here, it's going to be choppy, but we still think these 6,000s are going to be difficult not to crack, especially if you go back and look at the individual names. It's going to be interesting. Look at Facebook this week as we come right back into this 170. It's going to be very interesting to see how we trade here. Clearly above, it could try and ramp, but if it's back below, it could get very heavy, right? Apple, we still think there's a lot of headwinds ahead for Apple. So We think any move back into the 156.50s is an interesting sell zone for this whole area to cap for a sustained move back into the 145s. Tesla, again, we'll have to see what happens, but this feels extremely heavy, even if you look at the weekly close, if you look at the monthly close. Very, very ugly close on the month, right? Very, very ugly close on the week. And again, we think here, unless Elon can whip up a miracle, chances are, as long as we hold below the 350s, we're coming all the way back into the 300s and 290, 270 mark. No change. We've been looking at that for quite some time. Also, NVIDIA is a good example of how, you know, the headlines can change from it can do no wrong to it can do no good. So again, once you see this kind of pattern, you can only sell it, right? The big question is, can it hold below 185s? If it holds below 185s, we still think the path of least resistance is still to get another test of these 168s. If it's back above, then, you know, it's probably because everything is ramping up in a big upside squeeze. Amazon, another one which we feel is headed lower. Big flush above here, peak Amazon. We feel we're going to come back down, test 920s. That's going to be the pivotal area. And once we break below, we've got a next move coming back into the 840s, 850s. So no real change there. It's going to be interesting to see how those trade. In terms of the dollar index, so we've been talking about the dollar index catching a bid and time to get a little bit of a healthy retracement on the dollar index for quite some time. And, you know, what we said was a move back above the 91.90s. We'd expected to see it come back into these 93.20s, etc. And what we were saying is, as soon as it closed above here, look at all these holds to see a strong rotation up to this level. And then what was going to be interesting was how we close the weekly, because potential, the low is in for the move back to the 94.40s, 94.50s. What did we need to see for that to confirm that is a weekly close above the 200. So we got the weekly close back above the 200. So as long as we don't get daily closes below the 91.90s, our base case hasn't changed from this whole basing action and move back above the 91.90s, is that we're steadily making our way back into 94.40s, 94.50s, and that's going to be the next interesting bull bear line. As we said, there are a couple of interesting ways to play this dollar strength. Our favorite was long USD CAD, but also if you're looking at euro, the only asymmetric risk reward trade out there was to get short euro, right? Was to get short euro on that failure into those 1970s into 2050s, and to play these shorts, stops above these highs for a retracement back 116.50s. Now it looks like euro is going to open down today on the Catalonia news over the weekend, so this trade is still in play. Our base case hasn't changed. We don't change unless the levels change or break. Failure at highs, we're looking back to 116.50s. This is the big bull bear line. As long as we hold inside this area, much to do about nothing. The upside rotation could still be fully in force. We need to see close outside here. If we get a daily close below the 116.50s, then we think possibly game on back for the 113. But for now, this short is in play for 16.50s. The date is going to be at 116.50s. 116.50s bounce could be right back into the middle of this range. Down, we think there's a lot more downside coming. The other one, well, again, and similar on Aussie, very nice failure of those highs. You see the weekly heavy off that 200. You look at the monthly again, very, very heavy. So this is still in play. I mean, you can go back at the post. We're looking for this to come back into the 77.50s, 77, and gold will have a role to play here. But again, back onto that CAD, we'll look at gold in a second. And nothing has changed on CAD, right? So basing here is aligned with that retracement, or basing on dollar index. Our call was we're going to come back into the 125, 124.10s. Now, normally this would be a sell zone for continuation of the move back down. The only thing that really changed here is that Polos threw the longs a bone and maybe threw them a little present. So the way this is trading here, especially since all this puke was especially on those rate hikes, etc., now you could get a lot of those shorts caught off guard. So what we would look at, the way we would look at it hasn't really changed, except for the fact that Polos may accelerate this move or give you an option to stay more aggressively to the long side. Day close above the 125, this could easily squeeze back into the 128, which would be a very, very key zone. Day close back below the 124.10s, then we could see a healthier retracement here. We'll talk about it this week, but probably we'll have to deal with something of the 50 back of this move up. We'll have some unresolved business that will be a bull bear line for the week, but for now, this is the zone to keep an eye out for. So again, we'll review that in this week. We'll be trading this quite technically in the daily webinar sessions. And what's going on gold? So I think most people here on gold are focusing on the monthly close, which was extremely bearish, right? Now we prefer to focus on the daily chart, but again, nothing much has changed. We've got a lot of wheeling and dealing, and obviously no North Korean news over the weekend, so there's no reason for this to really catch a strong bid. So the chart really hasn't changed for us, right? We said if this is going to move up with a strong upside bias, you'd have to catch a bid at the 1300. The fact that it hasn't caught a bid at the 1300 then will lead us to believe that there's more weakness here and potentially come all the way back into this whole area. Now they're particularly tricky to catch because the way this is trading, it's difficult to understand or see if was the action we saw into the end of the month, some puking or wheeling and dealing into day, week, month, quarter end, or was it really strong weakness? We still suspect there are a lot of bids waiting in this zone. So our base case hasn't changed. Day close below let me clear this up. Day close below the 1280s, we would not be surprised. We would not be surprised to see this trade back into the 1250, but our base case is still that this is all a long-term buy zone if you're trying to build some long exposure. And ultimately, we think that in the near future, there's a bigger chance that we're trading, say, $35 higher sustained than $30 lower sustained to the downside, right? So we think there's a lot more room for us to, even though this is a chop zone, there's a lot more room for us to trade higher than there is for us to trade lower. Again, time will tell. All we can do is highlight the way we see it, okay? Guys, have an awesome rest of the day, rest of the weekend, wherever you may be. Stay safe. If you're in France, if you're in Catalonia, wherever you are in Puerto Rico, it just seems like you have to stay safe everywhere. Nobody's really safe. But again, we'll be around trading, looking for asymmetric risk opportunities, trying to focus on dealing with whatever hand we're dealt this week. And again, have an awesome one. Thank you for sharing. Thank you for liking. A lot of nice feedback on the posts we put out on Friday, so thank you very much. Happy everybody enjoyed that. That's why we put them out. Have an awesome one. Take care. Bye bye, guys.